And you guys were the smartest guys in the room at Long-Term Capital Management. You had, well, I think it was Myron Black, one of the MIT professors that had done
We had two Nobel Prize winners. The creators of the Black-Scholes formula were it was Myron Scholes, Fisher Black, and Robert C. Merton. And it's called Black-Scholes, but everyone recognizes that Bob Merton made indispensable contributions mathematically, and he shared the Nobel Prize. To their credit, by the way, when those guys won the Nobel Prize in '97, Fisher Black had passed away, but Bob and Myron took the money and split it three ways and gave 1/3 to Fisher's widow, which was a very classy thing to do. So that was and well deserved, of course. But yeah, so we had two Nobelists, but the average IQ around the place was like 165 or something. It was crazy. You should always aspire to be the dumbest guy in the room, and I actually achieved that on a number of occasions. Yeah, we had MIT professors. David Mullins was former vice chairman of the Fed, the youngest full professor in the history of Harvard University. And lesser known names, but well known in the industry. Greg Hawkins, we call him the Hawk. So there was no shortage of talent. But
so John Goodfriend from Solly was there as well.
He was not. John Goodfriend was the boss at Solly when these guys coalesced as the in-house arbitrage team.
Okay.
I just did not to digress too much, but that blew up in a scandal. People went to jail in 1991 because Solomon. It was not our guys. It was Paul Moser lied to the Treasury. He was trying to corner the market in 2-year notes. It was like right out of like 1869. It was the gold squeeze, but he was trying to corner the market in 2-year notes, and there was a ceiling on how much any dealer could own. I think it was 25 or 30% of the issue. But he lied. He said, well, we're bidding for customers, which was okay. And he bought like 70% of the issue, but he lied about the fact that it was for the house account. He was saying it was for customers. And of course, he came close to cornering the market, but it was found out. He went to jail. But that caused the board to fire everybody. John Merriweather was not fired, but he chose to resign in the face of, he was not implicated, but it was kind of like he was vice chairman, so it was hard for him not to be affected. But then they left as a group and formed Long-Term Capital Management. So we moved to Greenwich, Connecticut. So we were the northern version, reincarnation of the Solomon Arbitrage Group, of which Goodfriend had been the boss. Right. I met Goodfriend later, spent a lot of time with him. Interesting guy. But
how so?
What they missed.
How so?
What he in a very well dressed, $3,000 suit and tie kind of way. He was very vulgar. But it was like second nature to him. He wasn't like a guy gratuitously throwing around the F word. It was just the way he talked. And but he was a real Wall Streeter, very wealthy and all that. But he was every bit as vulgar in speech as I had been led to believe. So I was like, okay, you're the real deal. So okay, so you got a whole bunch of 165 IQs and two Nobel Prize winners and all the modeling technological capability you could possibly. What did they get wrong? They had an a priori assumption that when spreads widened, when I say spreads, two instruments, off-the-run treasuries versus on-the-run treasuries, or on-the-run treasuries versus treasury futures. And you could apply this to anything, Japanese stocks, French stocks, and we did. If they were essentially the same, and should be priced the same and would end up the same if held to maturity, that you want to own that spread and just wait patiently for the spread to converge and then close it out and take the profits. And because the spreads tended to be razor thin, you could apply high leverage. Now, isn't leverage dangerous? Yes, it is. But if you have a sure thing, if you know it's going to converge, and in fact, they were going to converge, you could leverage it comfortably and you were just going to make more money. So that's the idea. So when the spreads widened and you lost a little money on the trade, they would kind of say, well, a good thing just got better. Like the old school traders say, it's nature's way of telling you you're wrong, get out of the trade. But long-term capital is like, wait, good things just got better, buy more. Widens, hey, buy more. This thing's getting richer all the time. But what's happening, of course, is that you're walking into a trap, because at the end of the day, in a global liquidity crisis, the spreads go like this. And then it's not a cliche, it's true. markets can remain irrational longer than you can remain solvent. And that was what they missed. We had $4 billion in cash. And we leveraged through futures and all that. And we had $1 billion line of credit. We had repo facilities everywhere. We were tough negotiators when it came to margin calls and all that stuff. And as I say, our accounting was so good, we knew how much we lost to the penny. This was never a case of mismarking or, gee, the market's going to get, what's going on? We knew exactly what was going on. That was kind of the scary part. It was like we did know exactly what was going on. But things like that have two stages. Stage one is the market's moving against you, and instead of getting out early, these guys double down in what's called a martingale strategy, in the firm belief that it would converge, which it would, but too late for them. But then there comes a time when the word gets out that you're the biggest victim, at which point you're the marlin and the old man in the sea. The sharks come at you. The street doesn't care about the market anymore. They systematically trade against you.
The greedy bankers are about to do it again. In 2008, they crashed our financial system and nearly bankrupted the entire global economy. Then they received trillions of dollars in government bailouts. And after, they demanded fat bonuses paid for by you, the taxpayer.
It turns out the banks haven't just been screwing the American taxpayers, they're also screwing over their investors. Turns out the banking industry is the worst place you could put your money, despite enormous taxpayer bailouts.
Now the bankers are back to take away your financial freedom. They lie and tell you that cryptocurrency isn't safe. They try to make it illegal for you to choose how to invest your hard-earned money. They lie and say cryptocurrency is used by money launderers and criminals. But look at the record. It's the banks themselves that launder hundreds of billions of dollars every year to the biggest criminal operations in the world.
Leaked documents have revealed how some UK banks have helped criminals, money launderers and Russians under sanctions.
American authorities discovered that the Sinaloa cartel moved $881 million through HSBC accounts as bank officials turned a blind eye to the illegality.
The bankers lie and say cryptocurrency is not a real investment. Meanwhile, the smartest CEOs in the world are buying billions and billions of it. The truth is that banks lie about cryptocurrency because it makes them scared. The banks take $9 trillion per year of your hard-earned money, and they are worried that they will finally be exposed. They're scared because crypto means they can no longer control your money, which means they can no longer control you. They are scared because you might actually understand your money and intelligently decide what to do with it. Now is the time for us to come together, fight back, and take control. It's time to educate ourselves, our families, and our communities. Because financial education means financial freedom. We know that cryptocurrencies will help us build the new decentralized financial system of the future. A banking system that is of the people, by the people, and for the people. A banking system where access to finance is a fundamental human right. A banking system that is free and fair and welcomes all humans on this earth. The DeFi revolution is happening. We, the people, can no longer be fooled. We choose to take control of our finances. We choose to take control of our freedom. We choose to take control of our future. Join us, and let's take back our financial freedom forever.